You ever had one of those weeks where your bank account looks at your life and it's like, yeah, let's make things a little interesting. First, your car breaks down. Then your dog eats a whole sock. Your AC decides to retire mid-July. And your bank account says, I wish you the best with that. So you hop on Google and start searching up fast money. And suddenly two options pop up. What are those two options, you may ask? And those two options are either a payday loan or a title loan. They both promise quick cash and they both sound easy. And they both have a way of turning a bad week into an expensive month. Welcome back to CWM University, where we learn together. And today we're breaking down exactly how payday loans and title loans work, the pros and cons of each, and which is usually the bigger risk. I am not a financial advisor, and this is just practical guidance. Viewer discretion is advised. We're going to start with payday loans. Imagine you're broke on Tuesday, you get paid on Friday, but you need $500 right now. And a payday lender says,
No problem. Here's $500. Just pay us back when you get your paycheck.
well, that's when things get interesting. Here's how it typically works. You borrow a small amount of money, usually a few $100s. The lender expects for you to repay very quickly, often within a couple of weeks. And they charge fees that make the loan extremely expensive. So if I didn't have $500 on Tuesday, what makes you think I'm going to have $500 in a couple weeks? Oh, okay. Now, the good news. Sometimes you can get that money the same day. Most lenders don't even focus on your credit scores, and you don't have to put up your house or your car to get the money. Now for the downside, because you know there's one. The fees can add up real quick. What looks like a small fee can turn into an extremely high annual borrowing cost. And a lot of borrowers can't fully pay the loan when it's due. So they borrow again, then again, then again. Congratulations, you're now stuck in the debt cycle. And that repayment window is super quick. Most times you're gonna have the money back in 2 weeks. If I didn't have it 2 weeks ago, you think I'm gonna have it in 2 weeks that quick? So this is not ideal when you're really struggling. Now let's get into those title loans. Because that title loan is tied to your vehicle, you may qualify for more money. And you can get approved pretty quickly. And the credit requirements may be flexible because most lenders focus on the vehicle and its worth. Now, the downside of title loans. It's tied to your vehicle. You miss a payment, now next thing you know, you looking for the repo man. And title loans can be very expensive. Those fees that attach to it, you don't want to pay that. And most people I know need their car. So if you lose the car, then it's harder to get to work, less income, more financial stress, and it's not exactly the upgrade you were looking for in life. So let's put them side by side. The first category, speed. Payday loans, fast. Title loans, fast. So we'll call it a tie. Next category, loan amount. Payday loans usually offer small amounts. Title loans usually offer larger amounts because your vehicle is involved. The winner of that category, title loans. Next category, risk. Payday loans can hurt your finances, but title loans can hurt your finances and you can lose your vehicle. Now I need my car. I don't know about you. The winner, well, payday loans are a lot less risky. Next category, cost. Both can be very expensive. So in this category, we don't have a winner. In this category is what I called a big red flag. Last category, worst case scenario. With a payday loan, you'll end up owing a lot of money. With a title loan, you'll end up owing a lot of money and your car gets repossessed. Ladies and gentlemen, that's what I call a rough day. Now you ask, what could I do instead? Maybe go down to a credit union and see if you can get a loan with a lower interest rate. Ask your employer if you can get investment on your paycheck, if that's an option. Call those people that you owe money and see if you can negotiate the due date. Also, you could ask your family and friends if you can borrow money, but if you borrow money from them, pay those folks back. Pay them their money. Okay? Okay. Now, every option I just mentioned doesn't work for every situation, but it's usually worth spending that 30 minutes looking up different options before you go get a payday loan or a title loan. But in order to not be in this predicament at all, look into budgeting your money and setting up an emergency savings fund. If you want a free template, you can check out my website. I give you a free template on how to budget your money, or you can watch this video where I show you where you can store your cash so your money can make money. So when an emergency happens, you can borrow from yourself and not somebody else. In conclusion, finally, in summary, payday loans and title loans provide quick cash. And that's why they're so popular. But with speed comes a hefty price. Payday loans can create a cycle of expensive borrowing. And of course, title loans can put your vehicle at risk. If you're considering either one, make sure you understand how much you will repay, when it is due, and what happens if things don't go according to plan. And remember, if a loan advertisement sounds like it's saying,
Don't worry about the details.
then you probably should worry about the details. If this video helped you understand the difference between a payday loan and a title loan, give it a thumbs up. Share it with somebody that can help. And if you haven't subscribed to my channel, subscribe. Thank you so much for taking your time out to watch this video. And you already know. Till next time.